Awesome. We'll jump on here 1 minute live, 1 minute early live stream. Good evening to everybody. Welcome to the Independent Investor Channel. My name is Ryan. It's cool. I like to do these live streams every Friday for the community and allow folks a chance to come in, perhaps maybe air their thoughts, throw some discussion within the already robust group forum that we have this evening. A lot of folks that have made their way into the channel, just looking to gain some further awareness of what I consider to be my favorite topic. And part of my motivation for starting the channel and striking up or throwing some logs on the fire surrounding this particular discussion is because I saw a very, very common theme amongst people in that there wasn't enough awareness to this topic. Now, I'm not saying that you have to come in and spend every 2 hours on a Friday evening with me. As a matter of fact, most people do not do that, all right? But it's nice for people to understand that that opportunity is out there. You can come in, you can throw your questions right at me. I run an unscripted live stream, certainly. Really some cool stuff going on right now. Guys, there really is. Obviously, the elephant in the room is the volatility that spiked up this week in the stock market. You know, big whoop. I'm going to go over some of what I consider some of the fundamental lessons that I've been passing through the channel for the last 2.5 years of making YouTube videos and potentially outline how it is that you could have maybe taken advantage of some strategic buying opportunities this week. Hopefully you were exercising your right to hold most of the time. I'll have you know I didn't do any selling through the course of this week. I did do some strategic buying. I've got a little project with the portfolios, and I've got them set really, really well. I strategize my different buckets in different ways. I tend to gear my Roth IRA of the self-directed. All my accounts are self-directed, but the Roth IRAs in particular, I'm really trying to build up as more of a heavy dividend income portfolio. I did a count of the dividend aristocrats before the live stream. I found it interesting that you all that follow the account know that I do have 14 dividend aristocrats, so a pretty good representation of historically paying back shareholders. I'm not one of those folks, if you do end up tuning into the channel, I'm not one of those guys that looks into a crystal ball, nor do I look into a skeleton prop to determine what it is that I'm going to do in the stock market. I take my investing approach a whole heck of a lot more serious than that. And, you know, if I looked at it any less serious, I would probably not have a YouTube channel, because I know there's people that tune into the channel and they're very interested in how I approach the stock market. No one approach better than the other, of course. However, it does beg the question of whether or not there's benefit to be had, whether or not you search out, you know, a first trade video that you've never heard of the platform, and you can sit across in a 10-minute video and get a tutorial on what I feel is one of the most cutting-edge brokers available. For you guys that are in the live stream already, I've left the portfolio number 2 for you guys. It's the very least that I can do for you guys that come in here and help us support the message, man. I very humbled. I really am. I look forward to this. I had an absolutely gangbuster week, and for me, coming on and talking about finances is hardly work, no doubt about it. I do have some channel creators in the group. I've got Brent first and foremost with the Financial Investor. Certainly anybody who makes their way in on a Friday evening during the live stream or catches it afterwards, I'd be in debt to you if you'd click over, help support if there's a little dab of wave that he can get out of coming on supporting my message. I think that's the least we could do. I would ask you to kick over there and throw down on your subscription. I will, in short order, offer my kindest welcome to JMac Investing, who has also taken his time to come on here. I think we're a lot more powerful together, to be honest with you. I do. I like JMac Investing. I really do. It's cool to see how other folks are taking hold and taking root, and doing so in addition to their regular job. My understanding is that Jason wants to build his channel, and anything that I can do to help him, I'll do that. I get a real sincere pulse from his message, which, quite frankly, sincerity goes a long way with me, brother. It does. You can be charismatic, and you can be controversial. You can be likable, quite frankly. None of those things really go as far for me as really just coming onto YouTube and offering your genuine tutorial about how you approach the stock market. And I think if you're able to resonate with people and they come on and they're like, dang, man, this is awesome. This is just a regular guy. And no offense, that's a compliment. I think there's a lot of folks out there that join this community movement who are also doing some of the similar things in their life. Getting up early, getting dressed, going and doing a regular job, maybe working hard, maybe doing some blue collar work like you're doing right now. I hardly consider my work blue collar, but for you guys know what I do, it is. It's definitely not white collar work, but I think there's something to be said there. Keep on grinding, no doubt. Don't compromise your message. You put out a couple of live streams that I thought were pretty awesome. Pretty cool back and forth Q&A. There's a couple questions that you guys came up with. What would you do if you had to go back and do it all over again? Fortunately, we do have the luxury of offering rhetorical questions like that. Unfortunately, as we all know, we only get one crack at this gig. And, for you folks that come on into the Independent Investor Channel live stream every Friday, I would contend that you folks get it. I don't think it's too much to ask. And again, I don't think that a lot of you guys come in and spend the whole 2 hours with me. Perhaps maybe you review it via maybe on a Saturday, maybe you re-review it, or you just put it on and let it play as more of a podcast. Because I typically, you get my best effort for 2 hours straight. You guys know at the end of a 2 hour session, I'm typically ready to fall out of my chair, which is totally fine. But I'm absolutely humbled at the opportunity to bring folks together. Real people, no doubt. I think the level of success that we'll have on the Independent Investor Channel, and quite frankly, some of the other channels, I've got Andrew Trapman trading as well, who's been with me for a long time. And I tried to kick over and check out his channel before we went live here. I intend on doing that before. Maybe look at re-racking my sponsored channels a little bit, because I love to offer those opportunities for you guys to grow as well. I will say this, in addition to the channel creators that have made their way on, what's keeping you guys from maybe starting a little YouTube channel yourself? Honestly, when I talk about empowerment with regard to the 5 benefits of the channel that we're going to go over tonight, I mean that. I really do. And I promised to reveal one of the secrets. It really is in relation to one of the videos that I released this week, and it was my first trade review. All right. And I had a comment come through. I think it was Christopher Blaine, who's putting the kids to bed right now. And he said, I don't want to make you feel bad. I had a pretty good week in the dividend portfolio. And I responded and I said, that's awesome. I want nothing more than for you guys to navigate this very difficult landscape in the financial world, and especially the stock market world, and succeed. I really do. I want you to navigate through that, man, and succeed. But for you guys that don't know, I'm not made of money. I don't come from money. You guys will see there in the portfolio that I've shared with you guys, I've generated some capital in that. Now it doesn't, I will declare the contributions in the account that I've put at the top of the live chat as contributions just over 60,000. The account now is worth around 85,000. So we've done well with some dividend appreciation, about 7,000, and about 13,000 of capital appreciation. Okay, so we've done well. I think we've probably underpaced the market. Now, keep in mind, this portfolio is made in conjunction with the portfolio that I've already declared to you, and together, that's really the collective holdings in the Roth IRA. But for the first trade account specifically, I want you guys to consider something, and I think J-Mac kind of alluded to this, and I heard him say something that got my attention. What he said is he wanted to build up a channel like the big boys, you know, and I don't need to be like the big boys. However, making a little extra cash on the side never hurt. Some might call it a side hustle, whatever you want to call it. But if you feel empowered enough, which you should, the message is not rocket science. It's actually very simple. We do our very best to grind and pulverize this topic until it's in a granular state and everybody can consume it, honestly. But if you ever felt empowered enough to get yourself a GoPro, my entire YouTube business works through this, and I'll show you. My GoPro goes in there. That's what I've filmed every single one of my 300 videos that I've got online. Has it been worth it? Absolutely. It's not even a question. And I think the cool thing about resonating with one particular personality or the other is to get on and really just tell your story from a testimonial perspective. I think it's extremely intriguing to me that we have the opportunity to do that now. Whereas when I was growing up, I never had that opportunity. And I don't know if Jason would attest to this, but he's my age as well. You know, that's the way I feel. I think it's pretty awesome for folks to come on and say, you know what, maybe I don't resonate with this person over here. Maybe I'm a little bit more in line with this over here. What a great opportunity to maybe expand the community and offer maybe your own testimonial through YouTube. And I'm going to leave that rhetorical question for you guys to answer. But what I will do is I will offer the number 2 secret on my channel. And with regard to the first trade account, that account has been 100% funded by YouTube earnings. All right. So kind of keep that in mind. If you're taking hard dollars, and I do differentiate between hard dollars, those dollars that you're going out there and working an hourly wage for, whether or not you're working a salary for, and that's part of the inflow that's coming in. It certainly is difficult to parlay those dollars and channel and filter them into a retirement program, especially when you're looking to fund maybe multiple buckets. Maybe you're looking to start. It's difficult to do that, right? And my response to Chris is if you kind of knew a little bit about where I'm coming from, some of the aggressive positions, you'll notice the number 1 position in this portfolio is General Electric. I just think the risk reward is there. I could be wrong. Can I afford to be wrong? Well, yeah, I can. But, you know, this is a money game and we do this for money. But I didn't set up YouTube to make money, okay? And that's why I haven't spent 1 dime of the revenue that I've made off of YouTube. But for you guys that are considering the opportunity that YouTube provides, even if you started one platform at a time, you guys know I'm on Twitter, which I absolutely despise. I really don't like it very much. It's kind of my sacrificial lamb, to be honest with you. I do, in fact, love my Facebook group. And I love you guys. You guys are the community really that fuels this fire, no doubt about it. It has very little, if any, to do with me. I just look at myself as the, kind of the facilitator of the discussion. I mean, this is something that I legitimately do. And I don't sit across from my audience and try to pretend to be somebody that I'm not, okay? You notice some of the questions here on the board. These are aimed to strike at the very essence of investing, okay? The first question up here is not, did I consider selling everything this week? All right? Did I consider buying everything this week? Those types of idiotic questions really have no place on this particular platform. And I wish I had a prop right now. I'd pull an Office Space on it and I'd take it and I'd smash it for you guys, because that's not how we approach the stock market. Anybody who's evolved with me and understands how I approach the market understands that a week is never going to make a market. Quite frankly, neither is a year. What will define you and your success in the stock market, put quite frankly, is the amount of time that you can get it right. The amount of time that you can hold assets and hold them for the maximum amount of time. That will give you the greatest chance of success in the stock market. There's no doubt about it. I just saw Investing Wisely. My brother right there just pop in. That's the 4th channel creator as well. So if you guys please show a little bit of love, if not on the live stream, please after go on and support these guys, man. These guys, man, I tell you what, it takes a lot. It really does. I don't think a lot of people enjoy talking about finances quite as much as me. I think there's a few. If you've got the motivation to start a YouTube channel, you probably do. And I think that's cool. There was a time there for a while where I was wondering where the passion was for embracing some of the power of the stock market, and it's really, really reassuring to see some of these folks pop on here. So Investing Wisely is in the group here. Please kick over and show your support, and thank you for that. I appreciate that. That goes to support the channel. That's really cool. You guys know the secret's out now, but perhaps maybe it is an attempt at planting a seed for you as well. I don't care where you come from. I don't care what you think you're capable of. And when I started my YouTube channel, man, I was nervous. All right, filming yourself is somewhat of a nerve-wracking experience, but it's amazing how it can really, really help you fine-tune your craft. Really, the measure of your expertise within any particular topic, and make no mistake, I don't contend to be an expert in this topic. I think it's way too advanced for that. But if you can teach a topic, you're worth some salt, especially if you can impact people for the better. So I'm going to leave that there for you guys. All right. So guys, welcome. I had a question for one of my good friends of the community here. And if you guys would just kind of bear with me, I do want to take this for action a little bit. And I want you guys to kind of understand where I'm coming from with this. I had Brenny Feliz actually jump in here and hit me up with a question. And he's got 6,000 to go in this year, right? We're getting to the year's end, 700 left to throw in the stock market. There's a couple things that go into this question. And I tell you what, getting the maximum amount of dollars into the self-directed Roth IRA is really the key. It really is. But you guys need to understand my holistic approach and not circumventing other aspects of your financial makeup just to ramrod everything into the self-directed Roth IRA account. Now, if you have the ability to max fund, that's awesome. That is awesome. Not a lot of people do. That's legit. Not a lot of people have that kind of capital, but if you do, that's awesome. What I would say is this: with the market in its current condition, I would be extra cautious in making sure that you're getting as much passive money put away that you can. And it has to be in respect to your time horizon. If you guys are 20 years plus on your time horizon, there should be no acknowledgement whatsoever to where the current stock market is. You've got a green light. You can invest anytime you want. Just please understand that in the short term, over the next 5 years, you're probably going to go through some form of a bear market or maybe even a recession, okay? The odds have just increased to around 32%, I believe. You guys can correct me if you'd like, but that's the last stat I saw as of today. What does that mean? Does that mean you go out and sell everything? Hell no, right? Look at your time horizon, okay? That should differentiate between trying to time a market in the short term or investing for the long term, okay? The second thing is, are you capable of taking that $6,000 and putting it all into a passive asset and having the risk tolerance to persevere through a downturn? What I'm getting at is your risk tolerance, okay? As a self-directed investor, this is somewhere that people give away the farm all the time, but it is a luxury and it's leverage on your side to get to define the level of exposure that you want to seek for yourself in the market. If you, for example, have $100,000 of capital and you take 20% of it and put it in the stock market, and that makes sense to you, then it's right. And nobody, not me, not anybody, is going to tell you that it's not. Because that 20%, if you follow and pay attention to my program, okay, that 20% is liberated, okay? If you decided to take that $100,000 and expose it to the stock market, boom, 100%, right? My tolerance can handle it. I've got a long-term horizon. I heard Ryan talk about the prospect of defining my degree of exposure to the stock market. I'm good with 100, man. You know, I'm doing good. I've got good income. I've got good cash buffer. I'm good. Let's put the whole thing in, okay? But it is a luxury to be able to define that level of tolerance as a self-directed investor. Excuse me, exposure to the market, okay? And this differs from going in and sitting down with a financial planner, right? Because they're going to want everything, no matter what your level or degree of comfort is with the amount of exposure that you're seeking, all right? The last thing that I would say to my friend, Brenny, who asked me the question, and I'm giving you my best shot. I think I understand you're in your 20s, I believe, if I'm remembering correctly. But start slow. Don't think that you just have to get everything right up front. We really do try to revolve around products that if you knew nothing about the stock market and you tripped and fell, I watched all Jason's picks when he does his portfolio review. You could trip and fall into any one of those assets and win, okay? You really could. So try not to overthink it, but also try not to get out over your skis. Okay, give it a chance. Give yourself a chance to be an investor and involve as an investor. Now, remember all the tools. Once you decide on an exposure limit, if you say, you know what, Ryan did mention maybe the stock market's at an all-time high, volatility's kicking up, we are involved in a trade war, maybe I'm going to take $2,000 of my $6,000, right? Okay, 33% of my capital I'm going to take, and I'm going to put it in the market, maybe a passive S&P 500 type of a product, and I'm going to monitor the market. No problem. Give you some dry powder to maybe shoot if the market does end up going down 10, 15, 20%, and have some rules, right? Have some triggers. If the market does end up going down, start to initiate some of that strategic buying. Now, I would expect that a layer on top of that is to start the dollar cost average program or the strategic buying program at your leisure, all right? These are all tools for you guys to pull out whenever it's appropriate, and these are the things that'll help you. Now, if you're signing up for the right account and you're allowed to do the dividend reinvestment program free of charge, you guys might not realize the benefit of that, but I'm here to tell you they used to actually charge for that stuff, man. Brokers are crazy, all right? Dollar cost average contributions going into brokerage houses and then pulling 5 3/4 basis points right off the top of every contribution you make as a self-directed investor, all that capital goes to you. That's what it's all about right there, all right? So I understand it's a lot to consume, but if you take it in pieces, which you have the luxury of doing, you'll be amazed at how things will really fall in line, and you'll do one of the most important things that I contend is so important for a new investor, and that's to avoid mistakes. Avoid mistakes. You can maximize your time, okay? We're all going to walk through this life in some form or fashion. The question is, how is it that you're going to maximize your time in the market, okay? If you're starting late and you've got 10, 15 years in the market, right on. The question still is valid. How are you going to maximize your time in the market? If you've got 40 years in the market, the question is still valid. How are you going to maximize your time in the market? Up here, maximizing time has everything to do with avoiding mistakes, avoiding or drastically minimizing the tax impact to your money, and drastically reducing or eliminating fees in the account, all right? That's strategic goal number one, okay? So if you collectively put all this stuff together, and I know I throw a lot at you, and I know it can be confusing. That's why I try to explain it in so many different ways, man, because you're not the only one with these questions. And keep them coming. Keep them coming, because I'm not going anywhere. The Independent Investor Channel will be here 20 years from now, I guarantee. And 20 years from now, I will also not be conferring or looking into my crystal ball, asking for answers as to which direction the stock market is going to go, because nobody knows. All right, good stuff. Let me get here into the group. We've been going 26 minutes on the dot here. That was kind of my opening a little bit. Got kind of a pretty cool show for you guys last week. I did mention Kroger, ticker symbol KR. Very happy with that performance. Got 8%. It wasn't the 158% return that Doug Whitaker got today, who's also in the group here. But hey, I tell you what, man, you want to play a game, there it is. But congratulations on that. Sounds like that was a successful trade. Rock on. I'm all about it. And there's nobody that comes into my group and maybe consumes a couple minutes or has consumed every piece of content I've ever put out there that I don't want to have succeed. I will go one further. You come in my Independent Investor Channel and you don't like me, but you take something that you can deploy, fall on your face, and use and succeed at, I'm all about that too. I love you too, all right? Never to see you again, but if you can succeed at it and get a little success in your life, I'm all about that too, all right? So good stuff, man. Putting out stuff that actually works. 130 shares of SPHD and counting. Stephen T just dropped it. And those are the types of products that we want to revolve around, right? So the top 50 dividend payers in the S&P 500 rocking it out right there, right? Pays a strong 4% monthly dividend. InvestCode did a good job. I look at that listing of products and I'm not really that excited about the individual listings. I would probably, I mean, it's Ford's in there, Weyerhaeuser. There's some good stuff in there. But I like it collectively. That's why I own the ETF. So good stuff, throw it into the group. And this is one of those cool things about discussing products out there. You guys know I'm not a financial advisor. I mean, I can't come on and tell you, you have to invest in this, this, and this. So I just come on here and tell you I invest in it, okay? Let's just gain some awareness on this stuff and stop pretending like this stuff is a big freaking secret. Pisses me off, all right? Good stuff. I just saw one of my good friends pop into the group here, Lydia Santiago from Southern California. I hope she doesn't mind me saying that. Southern California, there's a lot of people there. So release that through the social media. Oh my God, Lydia's in Southern California. But thank you so much for coming on. I really appreciate it coming on. I'm starting at the bottom. So I'm seeing some of these folks that get off work a little bit later, and I'm kind of working my way up. But the thread at the beginning of the live stream was so freaking huge. I didn't want to start at the top and miss some of these guys at the bottom. So I'm kind of throwing a curveball to the group here because I do want to work up here And I want to get to some of these folks that I hardly ever get to, but because I know she says Pedro girl. See, that was a little more specific than I would have offered, but I've got a special place in my heart for San Pedro for sure. Good stuff, guys. All right, and Lydia's the fifth, if I'm counting correctly, the fifth channel creator, and I know you guys go over and help her support her mission as well. I'm all about it. I'm all about it, man. She's brave enough to come onto freaking YouTube and offer some portfolio offerings and how she approaches the stock market. The cool thing, man, we're all different. That's the beauty of it. And I am a staunch believer that together we will achieve far greater results than we will ever achieve on our own. All right? That's my belief. All right, let me cruise up here. I've got Larry Mass, a great friend of the channel here, and I already mentioned Andrew's in the group. Bob Wright will pop in tonight. Ernesto, good stuff. I've got Greg Cammey, good friend, very sharp investor. This guy, E-Trade commission is $6.95 per trade. That's really interesting you mention that, because what we're trying to do here is separate what I call the discount brokers, and they are. Freaking they are. Let's just get some common terminology. M1 Finance, discount broker, very easy to use, but it does not compare to the major brokerages. Okay, I just did a video on sector allocation. It's hard to find those tools on the discount brokerage, and I think they're getting better, but I think it's night and day. I think you're going to get what you pay for or what you don't pay for. I just think for those entry-level investors that are looking at their first $1,000 account to the first $10,000 and they're working toward 25, right? You see how I speak to everybody, because I don't know what situation you're in, but if you're at 12,768,000, right, you're moving toward 25 grand. Once you get up to that $50,000 level and you start to kick around some serious capital, maybe 25 to 50 grand, then you can maybe look at shifting from some of those discount brokers into something that's a little bit more in line with what Greg Cammey's using with E-Trade, TD Ameritrade, Charles Schwab. I'm very satisfied with Merrill. They're freaking awesome. They are awesome. And that way the trading incentives kick in and you're not getting chewed up by that $6.99 fee. You may think that it's worth it. I mean, you may just opt to pay that trading commission for the opportunity to go with one of the major brokers, but that's totally up to you guys. Okay. But good stuff. Thank you for working it. Go Roku, Lydia. That's her name. the stock that goes up 500% already. That's really awesome. I like Roku. I like the product, which is interesting. I typically like to invest in stocks that I can resonate with, I can relate with, I understand their business. And Roku, I haven't invested, and I'm just trying to stay off the growth tip right now, guys. Stay very close to the vest with regard to the quality in my portfolio. I'm really trying to lean toward quality. If this stock market gets cranky, I can be rest assured and remain happy that I've got quality holdings, and that's just that's just the way I'm going to roll through this deal, and I'm going to continue to monitor the market as appropriate. Got Mike O here in the group as I'm working up. Daniel Martinez, buy a little bit of the sector every month. It's really sharp. I'm kind of got an experiment here with these different buckets, dividend, growth. I really want to start an M1 pie with some growth stocks. I've got 10 that are about my favorite, Booking, Amazon, Facebook, Google, throw NVIDIA, maybe even some Netflix, CRM, Salesforce, PayPal, Adobe, and one other, I think, in the growth category that I've got. Ryan, think, one more. Where are you at, Ryan? Oh, you're off your game. 9 out of 10, not too shabby, but I do want to start a portfolio, maybe throw a couple grand in there and start accumulating some partial shares. We could have never had that discussion a couple years ago. The possibilities now with this right here, leveraging access Think about how accessible the market is. And for you young folks that are coming into the group, you're probably like, okay, yeah, whatever, old fogey, whatever. You know, you're 41 years old. You might as well take up a freaking rocking chair. I don't see it that way, okay? It wasn't my fault. I was born in 1977. It wasn't my fault, okay? This is just what was bestowed upon me, just like my name, okay? But this leveraging access, you realize how fast things have changed? Do you realize how crazy it is to be able to do what it is that we do over this machine right here? It's insane, all right? And being able to leverage your access to the stock market is just absolutely key. It's just insane. And to buy a little bit every month, you get to do that in some of these discount brokers. And for you guys that have worked your way up, again, right? Each and every one of you guys, if you're feeling empowered here, which the question mark means you answer it for yourself, is that you're looking to achieve that next financial tier in your life, 10,000 being the toughest. Some of the folks that are coming in that are starting the investing game, I had Ernesto kick in, one of my good friends through the channel, no freaking doubt about it. This guy's been with me for a long time when we started the channel up in New York City. He was one of the first ones, but he just came out, left a freaking amazing comment, man. I almost damn near cried, almost did. Because if we're impacting people in that way, what comes to my mind when he makes a comment like that and says, thanks, Ryan, man, this is awesome, because I'm starting to freaking feel what it is that you're talking about. I'm starting to feel it. And I need you less. And it's a good thing, because I'm starting to making these decisions on my own. I'm starting to understand that, yeah, I might have made 80% based on a stock that you put on a video, stocks to own forever, which that's a no-brainer, okay? Microsoft is just that good. It was on my dividend stock in the collaboration I did with Ryan Scribner, right? It's just that good of a company, okay? But thank you for that. Good grief, I can go buy my own freaking Yeti. Good grief, man. It's awesome, awesome. But Jesus, now you made me lose my train of thought, man. Jesus. But I tell you what, those are the types of things, man, that when I'm talking about leveraging access to, think about how powerful it is to reach somebody like an Ernest and you know, and many others too, that I would have never had the chance to push out the message. And if nothing else, man, when my head hits the pillow at the end of the evening, which it does, I'm just like every other person, I can rest assured knowing that we've made a real impact. And try not to be, I know there's folks that come in and they want to get an initial reaction from the channel. I think you're probably getting most of the benefit from the channel if you're coming on and you're giving it a chance, okay? Really internalize the information. And that's why I put ownership, all right? You feel connected to your program, okay? And if it was through the channel like myself or Jay or Investing Wisely or some of these other guys, you know, Lydia pushing out a message and Andrew, I mean, if you go into Brent and you're like, man, I can do this. Hell, I've never even thought about investing in this way. We need to start thinking about it. We need to start thinking about it as of yesterday, because I know some of the doom and gloom that I put out there on the channel with regard to the income gap, I'm not making it up. It's real, okay? Talk about another thing that pisses me off, okay? A lot of people making very, very easy money. Well, there's a lot of good people supporting a lot of good initiatives, but they're having a hard time getting ahead, okay? They're having a freaking hard time. This is where I come in one small niche with regard to finances. You can get ahead with this stuff. You really, really can. Very important. Thanks for that comment. I do agree. And just to add a little bit to what your comment is, Daniel, these brokers allow you to do that. Unlimited free trade and first trade, unlimited investing opportunity in M1 Finance. It's so cool. I've got mine. I've got my sector's Spider ETF set up for $25 a month. Why? Because that's indicative of what I think a new investor could potentially do, right? So I want to be able to prove to you guys the power of what $25 a month can do. Could I do more? Yeah. If I have the opportunity to strategic buy that account, guys, I'm absolutely going to do it. So don't think for a second that I'm not going to be razor sharp on that opportunity. I just haven't seen it yet. And I haven't done anything. It's just been set up on a straight $25 a month deal for the few months that I've had the account. And then that's the way we've done it. But what a great opportunity to be able to do that free of charge. It's awesome. All right. What's the E-Trade commission cost per share? You guys are talking amongst yourself. That was kind of cool. Thanks, Bob. But the market is high, so high. Mike-O says, I agree. You just gotta be careful. I'm trying to make some strategic moves in my portfolio to move a little bit more passive. Okay. I'm straight sold on Vanguard. I don't know about you guys. If you're seeking out I know Jason with JMac Investing, he's got a pretty good mix of ETFs. I stick a little bit closer to Vanguard. He hit me up and said that I believe it was Fidelity, right, Jason? That give a 20 basis points break there. I think they're 0.08, and I think the sector spider ETFs are like 0.10. I think they've come down just here recently. I saw that the expense come down. Actually, they might be 0.07 now. So, hey, we're all the beneficiaries from that. Let the freaking big companies fight for those tenths and hundreds of basis points. We're the beneficiaries of that. And quite frankly, I feel good being on the front side of the wave. Okay, I do, right? Zoomies. Right, Lydia? All right, good. Stay on the front side of the wave, not the back side, all right? You're going to end up on the reef, all right? Daniel Martinez says, I have 24 and a managed traditional, you bet. Last week, I opened an IRA with the E-Trade. On Monday, I bought 1 share of each sector. I thought that's what I'm going to do each month. That's cool. Hey, that's a plan. In one word, it sounds like you're attempting a scale. And that's really smart. I like the approach. You've got some good capital already working for you, and you're looking to strategically use multiple buckets. It's a strategy that I use. Don't put all your eggs in one basket. I know there's people that are going to come on and want to throw tomatoes at me. That's freaking fine, because it may impact your compounding effect. I look at it a little bit differently. I do. Okay. I don't beat myself up for just putting all my money on a big mountain pile and letting it compound on each other. I think for the invested capital that I have devoted to investing, I'm going to let that work. And I do not mix the two. I talk about this all the time. I have a cash account that I build independently on my own. I have a fixed income section of the joint brokerage account that I build on its own, and then I fund as appropriate the 2 Roths and the 3 taxable brokerages on top of that, and I throw a couple 529s on top of that, which I'm in the process of rolling over to Merrill. If I had it to do over again, I would have done a UGMA account for the kids, but that's another topic for another day. All right. Doug is the man. I agree. Well said. Well said. He's probably laughing because he heard me call him out during the Steelers game. That's all right, though. I keep it in the reverse only because my cash is low. So if it drops big, I want to make big moves. And that's really smart. I just think Mike O is the comment that I'm referring to here. And I just think the more you guys can look to evolve and fine tune that level of exposure that you're satisfied with, no matter where the market is, whether or not it's high, low, in the middle, not doing much, volatile, low volatility, it doesn't matter. Seek out that level of exposure that you're comfortable with. And honestly, guys, I'm always looking at fine tuning that very aspect. Okay. Right now, I just told you guys I didn't sell anything this week. I did do a little bit of strategic buying. I mean, I'm talking about 10 shares. Actually, I think I bought 50 shares of VYM. I could tell you, I left it in the comments, but I'll disclose, broke it up, VYM and VTI in the one account, and then a small token position, the S&P 500 in mine. That was on the huge down day, little strategic buying when the market's down 800. I can't help myself. I'm like a kid in a candy store, okay? And on that particular day, I think I was down $4,400 in one day, okay? Fortitude, all right? You got to be able to stare adversity in the face a little bit in the stock market game. If nothing else, I do think that everybody has the capability to maybe become a little bit tougher in their approach. And sometimes that's what it takes, is a little bit of toughness in this gig. What are your thoughts on Prudential? I love it. I've got BRN Bumba. BRN Bumba. If I'm saying that right. Prudential I really like on a valuation. I've actually owned Prudential and MetLife this year. I sold them for a profit, a very good profit, but I think the yield on it is absolutely worth it. And I think the valuation, I think the PE on it is still less than 10. Correct me if I'm wrong, if not hovering around 10, but I love the insurance business. I really do. I want to say I did buy United Health Group. I do own that. I don't own any of the big insurers. I'm just doing a quick review. I've got 60 holdings in my portfolio, all riding around in my nug. But I don't own Prudential currently, but I do like the stock a lot on a valuation play. Anything lumped into the financial category, equities offers like State Street. I've just been absolutely murdered with State Street. It's kind of the other side of the coin. Here I am preaching about low fees, and these guys are really cutting a lot of cost, which is cutting into their bottom line, which is a good thing, but it just hurts the stock price. I bought State Street on valuation as well. I think that's one of the holdings in what I declared up top for you guys. Again, it is what it is. I don't hold back secrets, and I carried over the exposure into M1 so you could actually kind of get an idea about the money amount in there. I told you 60,000 contributed, account value 85,000, about 7,000 in dividend income, and about 13,000 of capital appreciation. Okay, so some of that is house money that we're working with. Okay, so that's kind of where we're at. Thank you for the question. I really appreciate it. 4% monthly is way too high. That annual percentage rate is sky high. I agree. I can't believe if there's any silver lining in this volatility in this market. It's just absolutely bananas. Is the fixed income portfolio. I've got some of my intermediate bond holdings, and for you guys that watch the channel, I cannot offer direct advice, for example. And so what I do is I offer what it is that I hold in my portfolio just because I think it's freaking interesting. But the fixed income is on fire. Some of those ETFs in the intermediate space are up 13% for me. So all of them are in the green. They're just on fire right now. So kind of a bright spot in the portfolio. To me, again, it's not a Doug Whitaker trade, but it put a little pay dirt on my side, and it works, man. What do I always say? If you make money, man, it's a good thing. I'm all about it. So I'm continuing up through the bulk of the comments here, guys. I don't know if I can get to all of them, man. This is a really, really awesome live stream tonight. Really thank you guys for coming in, making it a success. Maiko, no FI, but it's good to know it's there. You guys are talking amongst yourself. I'm going to try to cherry pick and get some questions here from me if I can. I do encourage that, man. Kick it around. We've got 5 channel creators, at least that I've come across here in the live stream. Hey Ryan, how do you feel about taking on margin? M1 offers 30% of a portfolio at 4% monthly expense. I'm waiting for a deep red. I tell you what, if there's one takeaway from the financial education channel, Mr. Jeremy over there, which I think they're far and few between. No offense, I know there's some folks that tune in that really like him. I'm not one of them. But if there's anything that you've learned from that debacle, he really got into a lot of trouble. And a lot of people who started YouTube about the same time, quite honestly, they remember him chronicling that real trouble that he got into. And I think buying on margin right now is absolutely absurd. I think it's absurd. If you don't have the money to invest and back it with your own money, don't rob Peter to pay Paul. Don't do that. In my experience, guys, the stock market is it's not all about golden parachutes. It's not. It's really tough. It really is. It's a tough place, and it's not that tough if you're just investing passively in the S&P 500, but that's a practice that I typically really stay away from. And if you're a little light on capital, okay, and you don't bring in a lot per month, look at scaling back on what you can really put forward into the market, and just do a little bit. Now, if it's on the flip side of the coin and you do make a lot of money, it could work for you, but I would ask you to answer the question, why? Why? If you have the capital, there's a lot of opportunity to jam a Roth IRA full. If you're over the threshold, there's a lot of opportunity there to reduce your taxable burden through a traditional. You could do that. And then there's always an unlimited savings account. Why get overzealous and borrowing money to put to double risk? Because you're posting that money guaranteeing that somebody's going to get paid off. They're going to get paid off no matter what. And I think it's a real risk. It's not a strategy that I advocate for. I will tell you that the first trade account that I have is, in fact, a margin account. It is. The reason I do that is so I don't get any type of free riding restriction when I want to trade a stock. And I've never used that capability, not one time. I use it all the time in my self-directed account. But I have that in my back pocket for later on when the first trade account does in fact grow a little bit. And I'm going to be looking to maybe take some strategic trades. Maybe I won't. I don't know. Maybe I'll liquidate the entire account and put it into M1 Finance. I don't know. But I'm just looking to build capital right now. And what I said on the video is what I meant. I haven't made a move yet on first trade. I just used the YouTube earnings to go in there and put to that account. And for you guys that are just starting, just to kind of understand what type of income you can earn from YouTube, it's worth a few $100. And for me, that's a big deal. It's a big deal. So for you guys that are kind of working toward those limits of, 1,000 subscribers, 10,000 subscribers, 15,000, I don't see anything wrong with starting a channel. I mean, don't get into a rush. I know J Max all fired up. I gave him kudos for his download schedule. Jesus Christ, the guy's killing it. And I think he's got a regular job just like me, but man alive, I don't have that type of motivation anymore. I wait for the motivation to come to me. I'll have an idea come in, I'll flip on the lights, throw down on a YouTube video, and that's it. That's the way I roll. I don't sit there screwing around all day. I don't have that kind of time. So again, investing wisely. I don't make anything for my channel. Just knowing some people listen to me and all the great people I have met make it worth it. I would say just stay the course. I would say that a lot of people, and I've seen it too, man. I've seen some folks come that I just loved, man. They were such good people, and they don't make YouTube videos anymore. And for whatever reason, who am I to judge? Who am I? I mean, I could get sick and be off of YouTube, and you guys would never see me again. But I think I wish, some of those guys like Logan, for you guys that are old school and kind of remember when everybody was kind of pushing out their churn and kind of trying to feel their way through the YouTube landscape. I thought Logan was one of the sharpest ones. I thought the Financial Investor was another really good channel. Really did an awesome job, and he's still one of my featured channels just because I think he's super, super good. But lots of channels that I haven't met, few channels that I've got into a scuffles with when we first started. I know Jason talked about a little beef on Twitter. I went and tried to look at it, but I couldn't find it. But I wanted to see it. I don't know. Yeah, it would be kind of funny. I wouldn't mess with you. Jesus. Stupid. All right. My mama never accused me of being dumb. Anyway, I'm going to cruise up here. Thanks, Ryan. We appreciate the support. There's no problem. It's the least I can do. It's easy. That's not support. I'm coming on here, throwing a few words out on your guys' behalf. If you pick up a few subscribers for it, I'm all about it. I figure eventually I'll get mine. I do. I think the people that really relate and connect with me are the folks that I want on the channel anyway. So I very, very rarely I'll put out a video and I'll notice that I'll drop a few subscribers. That to me is trimming the fat, baby. I don't want them. Seriously. I get happy. Seriously. When I see a few people, I'm like, okay, all right. Well, you must know a whole hell of a lot more than I do, I guess. Good luck to you. All right. Good luck on maximizing your time. Unless you fall into that category of taking my good information and can't standing listening it passed by me, and you're going to go do great things with the information. And that I give my blessing on for sure. So exactly right. The amount of time you can get right in the stock market, it's really hard, man. And geez Louise, I've made every mistake in the book. I really have. I think J-Mac in his live stream, he talked about, if you could go back and do some things over again. Well, I wouldn't penny stock trade. I thought I wasn't going to have to work based on no precedence whatsoever and just a naive attitude about wanting to conquer the world. I thought that was going to carry me through to go ahead and purchasing my perfect stocks every single day that was going to allow me to put food on the table and pay the rent. Nah, doesn't work that way. Doesn't work that way. I'm perfectly satisfied with sitting on my fat dividend payers that'll just sit and mingle at 4 or 5% appreciation per year, pay me a few bits of dividend, and I'm good. I'm good. Right, wrong, or indifferent, I'm happy. I don't worry about it. The stock market does what it does this week, and I don't get crazy about it. And I especially don't come onto YouTube and try to pulse into people's emotion or discomfort, maybe, if you're a new investor. And the last thing that you want to hear, or the last thing that you should hear, is coming onto YouTube and being confused about getting away from the plan that you put in place, because you're going to end up not maximizing your time. You're going to end up on a path that's going to put you down the wrong path. And it's going to be tough. It's going to be tough to recover from too. AKA the facilitator. Yeah. Hey, you know what? Everybody does their piece for sure. I dig it. I really do. Larry Koppel's on the right is the right guy to turn around GE. I hope so. They really jacked that up. I'm not worried about GE. I'm worried about my dog company and Kraft Heinz food. That's a real bummer. What a real bummer. Really one of the worst stock trades that I've ever made. I've got thick skin, so I can beat myself up for a while, okay, Fight Club style, at your guys' entertainment. And I could kind of pick apart that portfolio a little bit, to be honest with you. I really enjoy the ETF products. I really do. But as far as some of the single stocks that I've bought, General Electric has been a kind of a dog. But I do think they are ripe for a turnaround story. I do. I think they're fine, but I don't know what in the hell is going on with Kraft Heinz. I guess nobody wants ketchup anymore, but oh well. I got a few bits in the portfolio. That's fine. Still paying a good, healthy dividend. We'll be fine, and we'll be there to fight another day. We'll see what's up. Technology definitely closed the gap between the stock market and us regular fellas. Yeah, it's really cool to get to come on and do this. In a lot of different ways. I mean, I bought my first iPhone 4 years ago. That's how long I had a flip phone. Everybody made fun of me. But I was such a cheap bastard that I never wanted to go in. I never understood it. They were always like, Ryan, when you go smartphone, man, you'll never turn back. And I was like, whatever, man. I should show you my cell phone bill. It's $32 a month. So maybe I took all that money because I was investing, no doubt about it. I had no idea what my investments were, and I was with a financial planner. So while they're off on the golf course and I'm left in the dark because I don't have a smartphone, right? But it certainly opened up a lot of understanding about the power of social media. There's pieces of social media that I could really just do without, to be honest with you. But it's refreshing to me to see regular folks come on. And I don't mean that in an impugning way. I don't. But if you kick over and watch J-Mac investing, you're going to see what I mean. He just seems like a regular dude. I'd like to barbecue with the guy, for crying out loud. Kind of alluded to the potential of doing a live stream. I think that'd be fun. Kind of a collaboration. I think that'd be fun. That's an open invitation, to be quite honest, with any of the channel creators. You're going to have to be the one to maybe like help me set it up, because I'm an idiot. Okay. So yeah, you talk about the technology being awesome to leverage. Believe it or not, I'd probably have to figure out how to do that little split screen thing that you did. I thought that was pretty cool. Yeah, hey, I enjoy conversing with people. And this is even about as one-sided as I like it to be. I wish I could actually talk to the audience, and I actually think that's where technology's going. And eventually we'll be there. We'll be able to do that. I want to build a studio where I can actually converse with people. I think it'd be awesome. I'm just gonna sit back and enjoy the ride, baby. So anyway, dividend growth, thanks. I watch a lot of your videos and keep grinding. That's right. And he's got over 500 subscribers. That's pretty awesome. When you start out, man, you gain like 1 subscriber, and then you go a few days and you don't gain any, and then you lose 1. And it's just like, it's crazy. It's just a crazy deal. But I just think, when you start out, I think your motivation should be why you started in the first place, and it shouldn't be on anything other than that. Certainly, y'all want to be successful, and y'all want to make your money and do that. That's a no-brainer. Everybody knows that. Everybody knows you're trying to do maybe a little bit more for tomorrow than you had yesterday. You know that, and that's all good. I encourage that, but it's really tough to get through that minutia of the first few. And I was fired up, man. I was doing the same thing you're doing. I was doing some serious power uploading, some serious editing. I don't do any of that anymore, man. Forget it. You want to hear my message? Great. If not, you can go somewhere else. That simple. I don't have time to sit there and make everybody happy. I don't. All right. Great numbers, Ryan. They're okay. They're okay. That particular portfolio is built a little bit more conservative, in my opinion, but keep in mind it does go in conjunction with the other portfolio that's about the same size of it, maybe 10,000 more in that one. Okay. All right. I've got my good friend here, All Good, who is part of the family here. When I talked about collectively being stronger together, she is actually in that discussion. So too old and scared to start a channel, laugh out loud. I don't know. I think maybe you underestimate yourself. I tell you what, I think there's a lot of folks, and I talked to him. I just talked to a colleague of mine at work today who's looking to retire. And what is he going to do? He's going to get into real estate investing. I don't know, to each his own. If it's not for you, that's great. You can come and live vicariously through me on the channel. That's totally cool. And it's not for everybody, to be quite honest with you. There's some negative things about social media and whatnot. I typically keep a very clean channel. It's good. I love my audience. The audience is awesome to come out and support the channel. A lot of folks come back to enjoy the content, and those are the folks that I resonate with. And I like the prospect of maybe tomorrow meeting somebody new that may come onto the channel and be like, "Hey, Ryan, we want you to fly to Vegas and talk to 5,000 people." Okay, I can do that. I can do that too. When would you like me there? So as long as I'm keeping pressure on those opportunities, maybe they do. Chances are they won't happen, but I can sleep easy knowing that I'm doing everything I can do to pursue my dreams. Because if you haven't figured it out yet, I'm pretty driven. Yeah. All right. So I'm back creating videos tomorrow. I had to take a break to complete a certification for the day job. Awesome. I've been there, done that. I know how it is. Do your thing, man. That's awesome. And that's the cool thing about it. You can walk away, come back and do it at your leisure. To be quite honest with you, I think you'll be amazed at how refreshed you feel when you come and re-engage the program. Thanks, Ryan. Go gold and silver. I'd like to. I think silver's a strong buy right now. I'd like to hear your thoughts on that for sure, because I think silver's streaming. I really do. I think it's a buy for sure. I'd really like to piece. I've been saying this for years. I'd really like to get some exposure there, but I haven't yet. So, anyway, no more drinks for me. Well, you can drink water. I mean, I drink water too. And you get yourself one of them. Get yourself a Yeti. All right. The greatest investment I ever made, Yeti. I drink a big coffee and it stays hot all day. They're lovely. I should actually buy stock in the company, to be honest with you. I think Yeti's going places. I just worry about the it being copied because it really doesn't seem that technologically unique to me. That's just me. You guys can tell me if I'm wrong or not, but I love the company. I think it's awesome. They were first to market, and that's the one I bought, and I was amazed, like everybody else. Oh my God, this ice water stays cold for 3 days. It's awesome. So I got Kelvin in the group here, man. Certainly shout out to Kelvin Ransom. What's up, Ryan? I'll finish watching tomorrow. Appreciate you, brother. No doubt. Finish up watching, and hopefully you can stay on for 1 hour and 5 tomorrow on the replay and hear me call you out. Good stuff. Tim Tellers, I put in my TV and watch it again on the weekend. Cool. I think that helps. I think the algorithms probably choke on what the Independent Investor channel's putting on for content. Certainly 59 live streams at 2 hours apiece. What are we looking at? About 6 days straight of content. I don't know. I don't know how we rank. I don't know. It doesn't matter. I don't come on here for that reason. I come on to give a good converse, and it seems like we settle out about 2 hours on these Friday live streams. I just enjoy the hell out of them. I really do. It's just really fun for me to talk about. You betcha. After the bourbon, it might get fuzzy. Yeah. Yeah, I got Jason says thanks. No doubt. It's my pleasure, brother. My pleasure. Stream seems fine to me. Good stuff. Would you approach building a portfolio where people can live off the dividends to pay? You've asked me this before, and I typically am. I want to be careful with this answer. I really do. I don't invest with some unrealistic goal in mind, and I don't mean that 7 figures is not realistic. Okay, but it doesn't drive my decisions in my maneuvering of my portfolio, how I fund it, how I approach investing. It doesn't really equate with me. I can tell you that equated with me when I first started. You know, wow, this would be awesome. 7 figures, 8%, 80,000 a year, right? I can live off that interest. Okay. In a perfect world, that's lovely. But here's the thing. You have to expose that 7 figures to the market to make that 8%, that $80,000 every year, year in and year out. And what's to say the market isn't going to suffer a severe downturn, a bear market of 20%, you're down 200,000, right? So your philosophy kind of gets blown out of the water a little bit. And then you're like, gosh, I don't know. Maybe I should have had a little bit more diversity. Maybe I should have taken a little bit of a haircut on my pipe dream to be raking in $80,000 of free money on dividend income. And I'm not saying that it's not possible. It is. I would just rather see you, if you had $1 million exposed to the market, you better have some other areas of investment in your portfolio, okay? You'd be, if you came to me and said, what do you think about that? And you had nothing else, I would say that you're top heavy. And so just you gotta be careful. Be careful, man. Overexposure, guys, we're not that far removed from 2009. I knew a lot of people in that. They worked their whole life to get up to $800,000-$900,000, and boom, the stock market crashes. And boom, now they're sitting on 425,000, and they're panicking because they're doing the math and they're like, holy shit, I can't retire on this. Like this is catastrophic. I just lost half of my retirement. And they looked at it that way. I lost. And they panic and they sell. It makes them feel better. Okay. We all know how big of a mistake that can be. If you're ever stuck in that situation, you know what you have to do. You have to ride it out. But it's an interesting question. It's fun to play with. Okay, it's fun to play with those scenarios. I understand. Compounding is important. Compounding effect is something that everybody should understand to get them excited about the stock market. But I really don't think about that right there. I just don't. But I did. And it's a subject of something that somebody works up in their mind when they start investing, and they're like, man, this is cool. This is possible. Yeah, it's possible more in theory, I think, than in reality. Okay. So good stuff, man. Thanks, financial investor. Just hit the like button. Awesome. I appreciate that. You guys are trying to work it out. Give me a dab of support. I tell you what, these live streams are getting 1,000 views after I post them. I'm kind of surprised that somebody would come on. About an average duration, people pop in for like 20, 25 minutes, which is cool. I'm all about it. You don't have to catch it all at the same time. It just mirrors the stream blurry. It might be a little bit blurry because I'm using an 8-year iMac, and I need to get a new one. If there's anybody who wants to donate to the Independent Investor channel, I've made some nice tips tonight. I might go buy a new iMac tomorrow with tip money that I got tonight. I'm pretty stoked on that, man. Holy smokes, that's really cool. But yeah, it probably is a little bit blurry. You know what? Here's the thing. It's not Wayne's World, but it's pretty close. Yeah, that's what I'm talking about. Now we're crystal clear, aren't we? See, it's that dust. We'll take a little hour and 11-minute break, okay? If you can't tell, I do enjoy my live streams. I really do. It's a lot of fun for me. It really is. All right. This is just me. Here's the streaming blurry. We fixed that. Thank you so much. Thanks, Ryan. Like you said, just normal folks want to join in these long-term gains. And that's the key, really. And it's cool, too, because, I mean, you're my age, but, I mean, your portfolio is established. I mean, you've got what a lot of beginning investors are aiming to achieve. So, I mean, keep that in mind. You've got a lot of different diverse holdings. You go across different offers. I like that about your portfolio. Just keep in mind, man, people are going to be looking at your portfolio and being like, dang, that's awesome. I want that. And I don't shy away from that responsibility. I think it's awesome. I think the more people, young people, yeah, I kind of got a pulse that you had a cousin or something that you were helping and they kind of look up to you. Yeah, of course they are. You know, the younger generation, I want them to feel like they can look up to us. There's enough people out there, man, that feel isolated and they feel freaking alone, and that there's nobody out there that wants to take somebody under their wing. You know what I'm saying? I think if we're doing a little bit to change that mentality, then let's change it. All right. I know Jason's got my back on that opinion, no doubt about it. He reminds me of people that, you know, I grew up in the country, man, you know, and just the stuff going on nowadays is just mind boggling. I have my theories about why it is. And a lot of it has to do with, in my opinion, loneliness. All right. Noella, my good friend, has popped in here. Noella, it's so good to see you. The business savvy Canadian. I'm so glad. Probably one of the most original subscribers to the message. She always pops in and says hello, but I know how busy she is out there doing her thing. And there's a few people I've come across in this channel, in the history of the channel, that I would love to meet in person, and you are one of them, no doubt about it. So thank you for popping in and saying hi. I know you typically don't stay for the whole thing, but you always make a point to come in. It means a lot to me. Thank you so much. All right. If you're on a phone, just hit the thumbs up. Nice. Good stuff. Kind of looking for some new. Vin's World is in the group here. Watching in stealth mode, still at work. I'll try to keep my voice down. All right, man. I'll help you out. I don't want to get you fired. I'm just going to hurt your dollar cost average program if you get fired watching the Independent Investor channel. I'll tell you what, you should have told me, man. I would have stopped dropping the cuss words. I apologize. Ernesto says teamwork. Where's the like button, J-Mac? I don't even know where it is. It's up in the top left-hand corner of the live stream. But anyway, we may make this live stream just a touch shorter tonight. It's just been awesome, but I'm going to work my way up here and get to all these questions. I'm about halfway through, so please forgive me. I always review this after the live stream, and it irritates me when I have a very legitimate question and I don't see it, because I'm trying to run the stream and focus in on the questions as well. So just bear with me, all right? Laugh all of his sisters. Here's Jim Cramer. Just kidding. Keep speaking the truth, Ryan. I like Jim Cramer. I'm one of the few. I used to search out his opinions. I think he's influencing people and getting them excited about investing. And yeah, I like his philosophies. He's one of the very few, if you listen to his message, to actually advocate a little bit for self-directed investing. You betcha. It's good stuff. Thank you for the first trade recommendation. No problem. It's my pleasure. I use it myself. I use it passively, and I do enjoy the product. I really do. It's fun. It's simple. It's very fast. You want to trade stock on it, it's very fast, very user-friendly, little bit more traditional. I thought M1 was a little bit, it took a little getting used to understand M1 finance. And I still have drawbacks about M1 finance. I'm not shy about pushing that stuff out. I think buying once a day is a joke. So you really have to buy for the long term. You can't look at having the entire spectrum during the market time frame when it's open from 9:30 in the morning until 4 o'clock Eastern time to do your trades. And that's one big benefit, I think, to first trade. But I think they're both good. They can get you where you need to be if you leverage the opportunity. Remember, all right? You got to leverage the access. You got to listen and take advantage of not only the accounts we talk about. Those are not a secret, right? TD, Schwab, Merrill, E-Trade is one of us been brought up in the group here. And then the discount brokers that we talk about, M1 Finance, Webull. I know there's a lot of people that are happy with Webull. I'm considering still rolling out that affiliate, but I don't want to bombard the channel with affiliates right now. I'm doing respectably well with the affiliate program that we've set up. And I want to put as much pressure on the channel to offer products that I personally use. And that way it really resonates with people, and I can use it and say, yeah, it's legit, or yeah, not so much, like I did with M1 initially. And then reconsidered my idea because I had so much positive coming through the channel. I was like, God, did I miss something here? And I restarted M1 Finance, and I realized that I missed some stuff, but not some stuff. There's still the same stuff does bother me about M1 Finance, but for the most part, pretty good platform. I've got a couple of my absolute favorite people in the group here. I've got Ernest in the group and Jared Odell right together here in the community discussion. Thank you so much. The Facebook group is going strong. We're over 1,200 members, providing a lot of value. There's a lot to be built there on the Facebook group. Initially, when I came out with my cards to give some fun things to look at in way of portfolio pies, and M1 allows you to do that free of charge, and we're going to be doing that through the Facebook group. And there's no two better helpers. I've got Adolfo Escodibo, who I don't know if he catches the live stream after, but Adolfo, Jared Odell, and Ernest are the three ambassadors of that group, and quite frankly, folks, you guys will, I will meet you guys someday, no doubt about it. It is absolutely, I'm funny like that. I don't know why you guys do what you do. I don't, but I thank you. I really do, because there's a ton of people that benefit from your work, no doubt. That's some serious talk right there. All right. I use a crystal ball. The financial investor, I no longer endorse the financial investor for saying that. No, I'm just kidding. He's probably laughing too because he knows what I'm freaking talking about, that stupid skull. And maybe you guys would love me more if I got a cowboy hat. I don't know. Perhaps maybe that would make me a better investor. I don't know. Okay. But good luck with that crystal ball, Brent. Good stuff. No selling, just topped up on Wells Fargo and Kraft. Yeah, I own them both. The Wells Fargo has never worried me. I'm good with Wells all the way. 8 times forward at PE at 8 times. It's insane. From a valuation perspective, Wells Fargo will figure it out. They're getting a lot of heat for what really isn't a lot of their traditional business. Their book of business doesn't have a lot. They just hurt their reputation by doing what they did, and rightly so. Kraft Heinz is a mess. It's a mess. Y'all didn't hear that. 1,000 people that review this at minute 20, you didn't hear that, okay? Sorry. That's how I feel about Kraft Heinz food, man. Eat that ketchup, all right? How can this many board members get it so freaking wrong? And again, that's part of the empowerment that we're kind of fighting that system a little bit, because man, there's a lot of people in these companies that are freaking idiots. Oh my gosh. It's just crazy, and it's unacceptable, to be honest with you, how you take something like that and massively screw it up. General Electric is the same. It's not exempt from this discussion. And Wells Fargo was a culture of selling techniques that I don't deal with unless you can tell me that a new person that comes in and walks timidly up to the counter and needs 7 accounts sold to them, that what they were doing was correct. That's a culture that I absolutely blame the management on, and they've suffered for it, but I think they'll be fine. They'll bounce back, and we'll continue to rake in the dividend until they do. What are the best investors? Not sure if that's to me. I think I know what he's alluding to. The best investors are dead people. He just wants me to say it over the live stream. It's true. It's true, man. Look it up. Validate it for yourself. I'm right. Good. Now, not on my end. Hold. Long term, baby. We're working up through these comments here. Let's hit the like button. Good stuff. Appreciate the support. Ryan, did you buy the dip on Monday? I did. I did buy the dip, and what I ended up buying were ETF products. I didn't buy any single stock on the dip. It was a pretty red day for me. I think I've already said it was a $4,400 down day, but I had some dry powder put away, and I thought it was a good opportunity to sneak a position as I start to transition to a little bit more of a passive in the portfolio. I thought it was a good time to go ahead and take a little stab at the ETF, my favorite ETFs, VYM, VTI, and VOO. I bought those blocks on that big down day. I think I got it around 600 down. I think the market ended up going down 800 at some point and then kind of settling back somewhere. I don't know. Whatever. I was doing my normal job when it was tanking. It was fun. It was fun to watch. It was like, wow, this is lovely. What a great day. I came to work to make $200 so I could lose 4,400 in the stock market. Right on, man. What am I doing? Not just kidding. I did. I always, anytime the market goes down that fast, I will be looking to strategically buy that market. It's a kid in the candy store. It's easy money. Easy. All right. Very nice. This Showtime, good stuff. All good. We're cruising up here, making sure I got all these. Steelers, yeah, good. Doug's time, 141%. I don't know how the hell you do that, man. That is amazing. Really good stuff, though. Very cool. All right, let me cruise down back to the bottom here, make sure I got to everybody here. Oh, nice. I've got Omega here who just popped into the bottom. Right on. So your formula is a random answer. I got to get to the top and see where he's going. Stock market, black ball sounds like 8 ball from IRC days. Okay, good. If you get your hands on a limitless, I will invest. Good stuff. Yes, great guy found out that. Ironically, the larger my position becomes, the more me trying to average down is just a drop in the bucket, and my buy seems more ineffective. It seems the less you can. That's interesting comment. I don't hold any more than about 3%. My biggest holding right now in the portfolio is Apple computers. I own about $7,000, is about 37 shares of Apple in the portfolio. And I typically I try to be careful not to overexpose. And the one real critical aspect of the portfolio that I shared with you guys is the GE position. I've taken a couple doubling positions. I've got my cost basis down to about $11. So we'll see what happens. It's just going to take a little shakeout here. Well, it's kind of been basing at $9-10. But if it continues south, that's fine. I mean, I'm not going to do anything with the shares, but it can turn around anytime. I'm ready. So anyway, when Kramer talks to stock too late, that's true. Last one, yeah, that's the one. Good. I don't think I've seen Omega in here before, man. Welcome. It's nice to see you. Somebody new coming in and pocket. Anyone who got magic pill that you can take to get smarter. Saw it on a movie and fancy making it big in the market. Yeah, good luck with that, man. I tell you what, it's a tough ball game in the stock market. Stevens T says long China and emerging markets, not smart to short the world's second largest economy. I agree. I own the emerging markets ETF. I'm happy to do so. Don't have enough China exposure. Alibaba right here is absolute. It really looks attractive. No doubt. I would pick up Baidu as well. I like those two names right here. China JD.com, of course. That's a great buy for such a large company. Chinese stocks just act a little different than U.S. does, so just be aware of that. So I've got a good friend here, Sarah Logston, who I actually referenced on the last live stream. I hope you don't mind. I used your Facebook trade there and how you were kind of not second guessing your trade, but kind of asking for a little validation when you took some profits and looked like you made the right move. Now, the question I have back to you, Sarah, is did you buy Facebook back when it went to 180? I'm just, stuff to kind of think about. There's multiple ways to win in the market, and you would have been rewarded for selling over 200 and maybe picking it back up at 180 again, because Facebook's a good company, all right? But never hurts to take some profit, and never want to beat yourself up for those decisions. No way. What's your view on Whirlpool? I like it. It's good. I've never really looked at the financials, so I would end the conversation there. But from a company perspective, I think it's good. I put it in the same category as not a Procter, but maybe a Clorox as well. Clorox, Whirlpool, Procter, something like that. But they're very good company. But I have to look at the financials and do a little deep dive. I've never owned Whirlpool in my investing career. But thank you. So J Max says it was his nephew. He's showing a little tutelage too. I like it. It's good stuff. Anyway, thank Bob. I heard December was supposed to be inactive. I guess that's maybe outdated. All right, good stuff. I like being put in stocks and hit with a ransom. Jesus. No investing in Chinese stocks for Omega. I like it. Adding beef memes on Twitter in the thread. That was me. Yeah, that was me, man. Yes, man. Yeah, so Bob says I can't feel comfortable with Chinese stocks no matter how good they seem. Yeah, I kind of have that same feeling. And you notice a gap in my portfolio of international holdings, and I contend that a lot of our companies that are domiciled here in the U.S. are, they're international companies anyway. So how much do you need to go out and get predominantly European exposure, Chinese, whatever? That's why I hold the emerging markets ETF the way that I do, so I can gather some of that exposure. And that ETF pays a pretty good dividend, by the way. So it's a pretty good little section of my portfolio that I hold, along with my other few ETFs, the VPU, VNQ, right, to get some real estate and some utilities exposure there. So good stuff. Just don't invest in anything China based. It's cool. That's the thing about being a self-directed investor, man. You can kind of do what you want to do, how you want to do it, and when you want to do it. You don't need to take direction from anybody other than yourself. It's kind of cool. And you might have some. You might be onto something there. I've noticed that the only Chinese stock I own right now is China Mobile. What a joke! What a joke! It's one of my worst stock trades ever. I've done everything that I possibly could, just to make a little bit of money. It went into the black for a couple days, and I took a big set of profit off the table. It was a little profit, but it was a pretty good amount I had in that company, because it just like it's crazy. It's like the regime pays you the dividend when they want to. There's no SEC governing the dividend payouts. It's pretty frustrating, to be honest with you. They'd come ex-dividend and come, and their pay date would come and it would go. I wanted to be like, what do I get for owning this company? The benefit of, or the honor of owning the company? Wild. So I do agree with what you're talking about, guys. I really do. You could be safer just staying away from it altogether. And just, there's a lot of good stuff out there to buy domestically. You can just kind of stay there. I'm still mostly new to the market and wondering how the year plays out and how established trends move the market. Certainly, never have to be in a rush. If you become more aware of the market, I think you'd be wiser for it. No doubt. Just pay more attention. As part of this deal here, of having ownership and being connected, what I mean by that is I think a lot of people work really, really hard to pay somebody a lot of money to be completely disconnected with their money, with the false sense of security of thinking that their money is, or their broker, their middleman, is working on their behalf while they're being conveniently naive. Big mistake. Big mistake, and most people do it. That's how most people invest. It's crazy. I don't like that approach. All right. You either just put the content on all platforms, very little traffic from there, though. Yeah, I agree. I don't know how much traffic. It seemed like my Twitter account was growing pretty good when I started. I got like 1,900 followers right away, and it's been chipping back ever since. I've lost 300 people on Twitter, and I don't know why. I'm annoying. I put my stuff out there like everybody else is super annoying, but I don't know. Maybe I'm getting a little bit of traffic from there. Maybe not. Who knows? I don't really know. But anyway, guys, I think we're kind of getting to the end of the live stream here. I'll go for a few more minutes. I'd like to chalk it up. I'm getting a little bit tired. It's been a very busy week for me. Obviously, the stock market has provided an interesting show this week, no doubt about it. I did want to talk a little bit about, if you had been with me for a while, how you would have went through this week as a self-directed investor, remaining calm, remaining grounded. You guys, I've been very transparent about some of the small strategic buy positions. It's just a week, right? What does that mean? And take a little dab of opportunity. Maybe you don't. Maybe you hold. No big deal. Maybe you go do something else. There will be plenty of other tests in the market. And the one thing that the financial planning institution will touch on all the time is the fact that you don't have anybody to cry on. You don't have anybody to console you or tell you that it's going to be okay, or anybody that's going to sit across the desk from you and stay long in the market. Okay. I'm going to save you a lot of money and tell you that you can come onto the Independent Investor channel, and I'll tell you that stuff free of charge. Okay. And these are things that anybody, if you've paid attention to the fundamentals of investing, what it takes to succeed, can do. Okay. You don't need to have any type of special angle. You don't need to have a special pill that you can take. It doesn't work that way. The stock market is just what it is. And for those folks that are looking to become a participant in the market, there's typically one way to succeed and one way only. And that's to remove all emotion. And as cliche as that may sound, it's true. It's true. I don't like to see my account down $4,400. I work very, very hard. But here's the thing. My program called for me to put those dollars to work and expose those dollars to risk. Okay. So it's not fair of me to come back and say, what did I do wrong? Why portfolio? Why did you go down $4,400 in one day? It's because I asked it to. That's what I told it. That's what I told it to do. I exposed it to risk. Okay. Now, over the coming days, we made most, if not all of that back. Okay. But having those realistic expectations and understanding that your money is going to fluctuate because you've asked it to do so, don't get bucked off the horse. Okay. Stay strong, stay grounded. Come into the communities like this. Come converse with other channel creators. Come talk with other folks in here that are deploying some of the strategies and get some of the support that you may need. We're glad to have you, no doubt. We'll continue to push out the message. If we've got 30 or 40 people every Friday, typically there's about 1,000 people that review the stream after it, and I'm very satisfied with that. That's awesome. Lydia says, I'd love to do a live stream with you. I'm down. You bet. If you've set it up, send me an email. Sent ryan.independentinvestor@gmail. You've got my email. Just fire it over to me. As a matter of fact, if you want to do it next Friday, I'll just let you join in with me on my live stream. We'll do that. We'll do a joint session. If I thought we could do a triple, live stream collaboration, that'd be cool. But you're one of the, you've been with me for a long time. You deserve it. Let's have a little fun. I'm down. You'd have to get home from work, I think, and just let me know what your schedule calls for. I don't want you to, have any conflict with your regular work. I know you're 3 hours difference and maybe out in Los Angeles, and I'm here on the East Coast, but I'm down. Just fire me over emails, no big deal. We'll throw down. Okay, no scripting, no scripting. That's my rule. I look forward to it. That's awesome. Thank you. I'm glad I just reviewed. I'm going back up through the comments here. I didn't see that initially. Just fire me over an email. We'll roll next Friday on live stream 60 on the Independent Investor channel, man. I can't believe it. It's pretty awesome. Sorry to ask, but what do you use to trade? I'm not sure. The Buttermaster 4, which that's a pretty cool little hook name there. That's pretty awesome. Sorry to ask, but what do you use to trade? If you're asking me what account I use a few. The primary accounts are with Merrill, which is a Bank of America company. They've changed their name a couple times, Merrill Lynch to Merrill Edge to now Merrill with Bank of America. I also use M1 Finance, which is it's kind of it's a discount broker, which means that you can invest in these companies basically free of charge. And the M1 Finance platform works a little bit more on a pie type of philosophy. And I also use First Trade. I'm affiliated with both of these companies. I own accounts with both of them, but I am affiliated through them. So please understand, okay, I've got to give you the disclosure every time I mention them. I could receive a small compensation with the channel, et cetera, if you do end up deciding to go with the account, fund the account up to the minimum standards, and I may receive a small compensation for that. But First Trade, M1 Finance, Merrill, and then there's a ton of other opportunities that a lot of these guys, I know JMac is happy with Fidelity. They're one of the premier brokers out there. I've got nothing but positive feedback. Guys, I get hundreds of people who hit me up with the feedback. So if there was somebody that wasn't cutting it or making them happy, there's a few I actually stay away from, and Vanguard, ironically, is one of them. Okay, their products, I love them. I'll own them in other accounts, which you can do that. The account that you have doesn't dictate what products you can buy. For example, if you have an account through First Trade, for example, or M1 Finance or Merrill or Fidelity, you can buy products from Vanguard, Fidelity, State Street, some of these other Invesco. You can buy from some of these other companies that offer multiple products. Okay, so keep that in mind. Hopefully I've answered that question. If you have any questions, let me know. But being introduced to some of those pretty cutting edge. Webull, I would look into as well. They're very good. You're starting to see some commercials on TV about Webull, but that'll kind of help you get started and hone in on some of those really good cutting edge opportunities there to maybe leverage for yourself. All right, so thank you for that question. Really good stuff. I see two YouTubers that poke at other tubers, one that pokes at how they invest. They themselves swap their investments and investment style all the time. Yeah, I don't know who it is. Again, I admitted to you guys openly, I don't watch YouTube. I don't watch the larger channels. The one large channel that I do support is a friend of mine, Ryan Scribner. He's a good guy, and he's making a good living at YouTube. He's a success story. He's legit. He's not going to push out garbage information. He pushes out information that does in fact work. And that's why I typically spend a little bit more of my time actually helping to support the smaller channels, to be honest with you, because I don't care if you're large or small. I don't care. I care how good of a person I think that you are. And hell, I can tell a lot through YouTube, man. I can tell a lot. I sit across from some people and I want to throw my computer through the window. Seriously, they irritate me. So I don't watch them, okay? Because I think they're causing more harm than good. You can take that for what you will, all right? Good stuff. A couple days ago, I agree. Look at my tweets and replies tab on Twitter. All right, yeah, I wish I could have found that. I may look again because I am interested. Message me on Facebook, I'll tell you. Nice, okay, there it is. That's the key I was looking for. Thank you, J-Mac, appreciate it. Ryan just tagged you in the thread. Okay, cool. Yeah, good. Now you're hooking me up. Get some reading material after I get off here in the live stream. Good stuff. Anyway, guys, listen, I think I'm gonna kind of start to wind down the live stream, cruise down to the bottom, make sure that there's nothing that's crept in here at the end in way of helping some folks. Crazy, is Vanguard good for a Roth IRA? That's an awesome question. I wish I would have got that at the top of the stream. A lot of people would have heard my twist on that. I think the Vanguard products are very, very good. You just have to pay attention to the race to zero for a lot of these products. JMac was the one who got with me and said that the Fidelity ETFs were actually cheaper on the sector side of the house. So you just got to pay attention. I'm sure that there's products out there that you can compare across the board. But ETFs are fairly common, looking to seek passive exposure to the market by owning a lot of different pieces of the stocks within a particular index based on their market cap. All right, so the S&P 500 is going to do just that. And I think they're good in a Roth IRA. I really do. But you have to make sure that you're using those products for what they're intended for, and that's to own passively, okay? A lot of people, guys, don't understand this, okay? A lot of people won't do self-directed investing because they think that they have to have a pamphlet or a color portfolio. And that portfolio was given to them by their financial planner, which establishes trust, okay? All that bullshit doesn't matter at all, It's bullshit, all of it, okay? Here's the thing. If you want to do a self-directed Roth account, the best thing that you could probably do is pick the very best index fund or the very best ETF. My most popular video basically breaks down in my side-by-side comparison that I don't think there's a lick of difference between the two, except for a few nuances in one that trades during the day and one that trades in the evening after hours, kind of like a mutual fund with a little bit of a $20 1995 entry fee to it, okay? Not a lot of difference, but I think both of them will get it done for you from a passive perspective, okay? Yeah, I do absolutely think it has its place in a Roth IRA, especially if you want to build a portfolio that gets broad base exposure. Because let me tell you, you're not going to be able to get, I see some of these portfolios that are declared on YouTube, and I'm scared for them. I saw one just last week, and I didn't have the heart to say anything because who am I? Okay. But it was very, very top heavy and very, very aggressive. I wasn't sure how it would be taken if I said something to be like, hey, God, you might want to just chill out a little bit on the growth strategy that you have, because holy moly, I can understand that you think that you're doing the right thing and you've got some serious money there, and it may end up working out, but I won't invest that way. That's way too risky. And if you're going to own a single stock portfolio, which is risky enough, even if you do own 14 dividend aristocrats in my portfolio, even with that said, you never know when you're going to come across that one that really gives you a drag on the portfolio. If it happens, it really does. All right. So I had a couple comments here. I got investing with Aaron. I actually did click over to investing with Aaron. That's number 6 right there. That's made their way into the stream. I'm sorry, Aaron, you just popped in here at minute 46. I'm finding it increasingly difficult to track your real rate of return of my portfolio. Brokers track gain losses, but miss the importance of dividend compounding. Do you track real rate of return? That's exactly correct. M1 Finance doesn't do it. So you've got to track it on your own. I think Joe Carlson comes out with a product to really help with this, and he's the best YouTuber, to be quite honest with you. I would chalk my own deficiency up to laziness, to be honest with you, because I don't track that. I just know mathematically it's going to work over time. That might not be good enough for somebody who's really, really into the numbers and really wants to have that validation in front of them. And to build that Excel spreadsheet out, Joe Carlson does in fact offer that. So if you have not checked out his content, he does one specific video on tracking dividends, okay? And that could probably be a better help to you than anything that I could give you, because I don't do it. And I do agree with you on the deficiency on most of the brokers. They don't do ROR, the real rate of return. So that's just the way of it. And again, to be quite honest with you, I don't care as much as most. I really don't. I know that over time, owning a Disney, a Johnson & Johnson, Wells Fargo, those companies, they're going to pay off anyway. And I'm good with that. And if they don't, I'll pass them to my kids. I'm good. So anyway, with that, guys, I will look to wind down the live stream, man. Thank you so much for everybody coming in. I do want to thank the folks that offered a monetary aspect to it. I don't know if you screwed up the decimal place. If you did, I will return that money, okay? Because I don't know if you intended on tipping me $499, but I'll go ahead and I'm just kidding. I'm just kidding. But if you didn't mean to do that, I'll send it back to you. But I look forward to your package. And guys, have a great, great weekend. Maybe look to coordinate a little bit with Lydia, because I'm not kidding about the collaboration next week. If we can swing it, we will. I think that'd be fun. We'll rock it out. The East Coast and West Coast, bringing it together, really in all seriousness for your guys' benefit. And with that, I will sign off, guys. Have a great rest of the weekend. I will see you next Friday for live stream number 60. Man, I can hardly believe it. So guys, thank you so much for tuning into the live stream, and we'll catch you guys next week. All right, take it easy.